Hi, this is Kerry Artek with Artek Advisory, and this is the AgriTalk video supplement that I produce every week for AgriTalk show. This is for the May 10th, Monday, May 10th show, in which I cover three markets: July soybeans, July wheat, and June lean hogs. I'm going to jump into the charts in just a second, but first, please let me tell you about my services, Artek Advisory. I cover a wide range of popularly traded commodity futures markets. You name it, really, in terms of ags and livestock, grain, so forth and so on. Please fill out the free trial form while you're here. I have free trial links just about everywhere. All I need is your first name, last name, email address, of course, and a phone number. And I'll set you up then within hours for a no questions asked, no obligation 2-week free trial in which every day you'll receive my analysis for a full 2 weeks, everything that I produce. During this time, I'll give you a call to talk about the market, see if you have any questions about hedging or trading, or what my opinion might be, or how you might incorporate your trading or hedging strategies into what I'm seeing. And of course, my end game is to get you to become a monthly subscriber of my services. There are no long-term commitments. You could, if you wish, go on just a month-by-month basis. So it's worth trying out to see if it actually may assist in sharpening, your perception and your trading and hedging over the course of the months ahead. Anyway, that's all I'm going to say for that. Let's jump into the charts and take a look at kind of the big picture of the bean market, soybean market. This is a long-term weekly continuation chart, presently reflecting the July contract. And since really last November, when we closed above this long-term channel top, I've been talking about the 1650s as a likely target over the next full year of trade, and it's been really more about 6 months, 6 or 8 months. And in fact, I think we should actually test it over the next few weeks, possibly this week. And why is that? Because last week we settled above a nearer term rising channel top on the same weekly chart that this week is at 1561 half. 1561 half can contain weekly selling pressures, and above which we could actually this week reach that long-term target at 1655 and 3/4, which can actually contain annual buying pressures. And from here, the market can fall back, rotate south into the 1130s again over the next, the timing of that is impossible. I'm going to say by the end of the year, perhaps, we would have to violate on the way down 1418 and 3/4. Let me get to that actually in a moment. But first, let me tell you that if we do close the week Friday above 1655 and 3/4 by greater than a 1% margin, which would be about 16.5 cents higher, which would be about 1672 and a quarter, if I'm doing the math proper in my head. 1672 and a quarter, I believe, if we settle Friday there or higher in the July contract. 1980s, 1982, rising ever so gradually, our next 3 to 5 month objective. But not until we close above this 1655 and 3/4 formation. Now, downside, if we close the week Friday back below 1561 half, the market is susceptible, highly susceptible, to falling back, and I think likely then to fall back to 1418 and 3/4 over the following 2 to 3 weeks. This rising channel bottom able to absorb selling through summer trade. And once tested, the market can rotate higher. In fact, holding above 1418 and 3/4, I'm telling my subscribers to expect over the next 3 to 5 months this 1655 and 3/4 formation, which, as I mentioned a moment ago, is now narrowed to within just a few weeks above 1561 half. All right. Not until we close below 1418 and 3/4 do I see a good annual high in the making. The market then likely to fall back, possibly as fast as it rallied up, fall back into the 1130s again. I would say that would be about a 3 to 5 month descent if we close below 1418 and 3/4. Let's move on to July wheat. July wheat, big picture chart here, as I've been telling subscribers for a long time, this rising 1/3 speed line. Now, this is a moving line. It's based on the most recent high. So it's been adjusting. At one point, I'll just kind of redraw it here for you. A few weeks ago, we actually tested the then rising 1/3 speed line on the money. It held the March low, the late March low, and from there we've rallied ever since. And so I've had to readjust because we put out a new high. Every time you put out a new high, you readjust your speed lines. I can't really get into that right now. It would take every bit of 10 or 20 minutes to explain that in a video. But let's just say this: 642 even is our base of long-term support through the rest of the year, and above which I am expecting before the year is out this 850 half long-term descending two-thirds speed line. So we remain bullish above 642 even, anticipating 850 half before the year is out. And in fact, I think 850 half is now likely over the next 3 to 5 weeks. This following last week's settlement, this is similar to what I was just talking about in the soybean market. The wheat market also settled above its meaningful resistance last week, and by meaningful, it's more midterm in scope. The 747 and a quarter formation rising weekly prior to last week's violation, I've been mentioning, could actually contain buying possibly through June, and from there we could fall back into the 640s again. Here we go, 640s again within a month or two of activity. But having settled above 747 and a quarter last week, this becomes our base of support now, really into June trade, and above which, and here's your 850 half level, you can see we really only have maybe 3 to 5 weeks or less before reaching 850 half. In fact, we could reach that within a week or two, holding above 747 and a quarter. That 850 half level, once again, able to contain annual buying pressures. Now, downside, if we close the week back below 747 and a quarter, it can fall all the way back to 650 half, 642, 650 half is our base of support, once again able to contain selling through the rest of the year. And not until or unless we close any week below 642 even do I see a good high made then for the year itself, and I would then anticipate the 490s over the following 3 to 5 months. But we're a long way from that right now. Bottom line with July wheat, bullish into June above 747 and a quarter, anticipating that targeted 850 half long-term speed line over the next 3 to 5 weeks where we can place an annual high. Let's finalize this video with June lean hogs. Let me show you what my subscribers have been looking at now for the last couple of months. In late March, we posted a long-term buy signal by closing the week above this channel top, horizontal channel top that is presently at 100.32. 100.32 is a base of support that can contain selling through summer, and above which I'm maintaining a 3 to 5 month upside objective at 134.95, which is nothing more than an extreme channel top that can absorb annual buying pressures when tested. Along the way, 117.30, this trend line rising off these highs. What I like about this trend line is it follows the move low from 2016. And so it is a meaningful trend line, 117.30. 117.30, by the way, is preceded by a rising channel top on the June weekly chart at 116.70. So what am I saying June weekly chart? All the data you see here on this weekly chart is June contract data only, whereas all the data you see here on this weekly continuation chart is the stringing together of previous high volume contracts. This is volume based, this weekly continuation chart. So what you have here is kind of a synchronizing, if you will, of resistance between the weekly chart at 117.30 and the June chart, weekly chart at 116.70. So the 116.70 to 117.30 area can absorb buying into June trade, possibly through June trade. From here, the market could fall back over the following 3 to 5 weeks to 100.32, where it finds support able to contain selling through the rest of the year. And as I said a moment ago, above which 134.95 remains a 3 to 5 month target. So that said, closing above 117.30 at the end of the week is possible. It is considered an eventuality anyway, and if this week we are then likely just 2 to 3 months at the most away from reaching our overall objective at 134.95, where the market can top out on an annual basis. Now downside, closing the week back below 100.32. Highly unlikely, but if so, the market has posted a good high into summer. We should then, over the next month or two, fall back to 88.65, where we could bottom out through summer trade. And I think that is all that needs to be said for this week's AgriTalk video supplement.
So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You have nothing to lose and much to gain.